Good morning. This is Market Movers for Tuesday, March 10th, 2014. Interesting day, not a whole lot of activity in the market. Yesterday, obviously, was the 5-year anniversary of the bull market, and it's also the anniversary 5 years ago of the bottom of the market, where intraday the S&P 500 hit 666. The stock market overall, the S&P 500 anyway, is up 180% in that 5-year period. So we're now starting into our 6th year of the bull market. Some interesting numbers, if you look at where the market is, obviously during this bull market up 180%, sounds great, but that's from the bottom. If you look from the last peak, 2007, before the 2008 and 9 crash due to the financial crisis, stocks are up about 20% if you look at the S&P 500 over that time period. However, if you look on an annual basis, we can look at a broad measure like the Wilshire 5000, which is a much broader index than the S&P 500. It has 5,000 stocks instead of 500 stocks, 10 times as many. If you look at that, the S&P 500, the market overall, stock market overall with the Wilshire, is up about 3.6% per year. It's up 5.9% per year from the 2007 peak. If you look back to the tech bubble, March of 2000, this is also, by the way, the anniversary of that peak for the tech bubble, March of 2000, stocks are only up 3.6%. If you look at the average advisor that's actually got data that can be tracked, the average advisor is only up about 3.6% from the 2007 peak per year, and about 3.4% if you go back to the tech bubble peak. If you take inflation into account, you go back to the 2000 peak, stocks, according to the Wilshire 5000, are only up about 1.3% per year. Pretty scary. So I guess it depends on your perspective. The unfortunate thing is that the market does look like we're probably at or very close to a top right now. We're probably going to have some kind of correction from here. So if stock performance isn't so great in 2014, those numbers are going to look even worse depending on when you take a snapshot of performance numbers. For example, if we had a 10% correction from here and then you recalculated all this stuff, it's going to look far worse than the numbers I just stated. So the other thing is we've had 3 bull markets. This is good. We've had 3 bull markets since World War II that lasted more than 5 years. One of them ended in the 87 crash, and the other one ended in the 2008 and 9 crash that we just went through. So 2 out of 3 didn't end so well. So we're in the 6th year now. Again, Monday, yesterday was the 5-year anniversary of the bull market. We'll see how it goes from here.